Now the same thing I did with the downside objectives, when we're using the fib for like targeting. What you're looking for is price runs that have retracements and a buy side liquidity above where market price is. If you're looking for bullish runs higher, how far can they go? That's one of the things that I was trying to teach last week. Can you see this high here? We're using it with that low, and if we went below this low here, yes, we wick through it, but did it really trade through it and show limits to go lower? No, it only just tap through it for the sell side. If it's a fulcrum point, it's going to run right through it. Like this high here now becomes a fulcrum point from this low. So from that low up to that high there, you can see why I was looking for 41.18. And it's just simply me looking at it for years, seeing that range, and I'm multiplying it between that low to that high. What's one standard deviation of the same range higher from this high here? If this high is broken to the upside, and we come back down into a bullish breaker, what makes this a bullish breaker? This up close candle here. We have a low, the high, and lower low. Why am I not using the wicks? Because they're gaps. I'm taking you right back into the price action. That is what? Showing you the bodies. The bodies tell you the story. The wicks is where the damage is done. So I'm cutting through candles to take you to the narrative of what should be expected in price action. Even in a sloppy morning like it is here, it still will talk to you. I don't have the 41.18 delivered yet. It may not do so. And it would not be a terrible, upsetting thing for me because, like I mentioned when we first started this stream, my expectations are very, very low because of the volatility that's expected tomorrow. There's a lot. But should this high be taken out, like it does here, notice the difference how this one runs through, closes through, and really rips higher, then comes back down into what? This buy side imbalance, sell side inefficient, this shaded area. I'm going to change this color just so you can see it by contrast. Not that I want it red, but we'll do that. Here comes that 41.18 level. So we traded down into that. So there's two PB arrays in the form of a discount. Because price is here, it trades down into this up close candle here, which is the highest up close candle between the low here and the lower low here. So we traded through it, and our attention goes right into that candle. And we have the buy side imbalance, sell side inefficiency. So trading into that here sets the stage for a price run. This becomes a fulcrum point. We can use the wicks for those types of things, but not for breakers. We don't use it for that. And since the buy side liquidity is 41.15 even, that's what we annotated. Can we use this objective here? Sure, you can use that as a partial. Like if you took a long in here, or for your annotations, you annotate that as this offered a wonderful opportunity to get and not even take the buy side that would be resting at 41.15. But you'd be looking for, in my opinion, the run to 41.18 simply because it's above the buy side liquidity, the high here. Let me show you. It's above this high here. So this level here would be okay for a partial, but in my opinion, if I were in this trade and I didn't have the uncertainty of what we're going to see today versus what we're going to get tomorrow, a lot of movement for CPI. Now let's go back to that fulcrum point I was showing you when we're looking for expansions, because we're already through the buy side and we're inside of that old inefficiency on the 15-minute time frame from February 9th. So since we're in between the low and the consequent encouragement or midpoint of that 15-minute gap on the 9th, the 12:30 candle on the 15-minute candle respectively for that day, February 9th, and you have this level here, what you're going to do is draw your fib from the low up to the high of the wick, because we can use wicks for measurements of range and targeting. The only time I'm using a wick for entries is when I'm using consequent encouragement or the quarter point of that wick. Those are the two most important levels for me on a candle's wick or a candle's tail, the part that goes below the candle. This is usually referred to as a tail, and the wick is usually the upper portion above the high. So we have a standard deviation of -2 here at 4126.25, then consequent encroachment. And then we have 4130.50. And then -3 standard deviations at 4134.5, which is outside the spectrum of the February 9th fair value gap. So I'm not really interested in that one because that's, in my opinion, a little overzealous for today. If we can hit consequent encroachment, that's satisfying for me for the morning session.